Hey guys, welcome to Monday, the 8th of November 2021. And what we've had in the overnight has been Elon, good old Elon again, putting it out on Twitter if you should sell his 10% stake in Tesla worth 21 billion pre-taxes. And I think coming out 58% or majority anyway, saying that he should sell. And of course, what we're getting is down 7% to Tesla on the pre-market. So Tesla is a 2.6% weighting of the S&P. And to give you a bit of perspective, Apple is about a 5.9% weighting of the S&P. So, is this enough to put the skits on equities for today or for this week? I think so. I think something like this is about the magnitude of what would provide a little bit of a capitulation for these markets. Um, Overall, I think these markets should do higher over the week. So I think could cause a little bit of capitulation. Seeing some, we're not seeing any downside right now on equities whatsoever. Only that individual Tesla stock, but it's going to be interesting to see how we open today. And how these markets do take the U.S. Open, and you could see an offer come into the markets, driving us down. And I think these markets are a little bit too hot. I think it's pretty difficult to kind of buy in here. But of course, if you have sellers above at new all-time highs, and some attractive liquidity up there, I think that might act as a magnet to just bring these markets a bit higher. But what am I saying? Well, really, let's have a look at these charts, and we can kind of have a clearer idea of what I am saying. So the SPOOs, here we are on the 60-minute chart. You can see we just, since last Wednesday, the FOMC, we are just, ripping to the upside here. We're currently up. Well, we're actually sort of about flat on the SPOOs at market right now. I think. Yeah, I think we have the all-time high 47.11s here. I think you could have one of these situations where the market kind of makes to hit a new all-time high, like by a couple of ticks, and then you just get a clean reversal down. This yellow area here I'm tracking is the actual. What is this actually? Oh yeah, this is just. I think this is the Asia pack on Tuesday. No, we're gonna get rid of that. But there is a nice little range and step here actually that I do want to still hold on to. So I think if we were to come down in this market, you could easily see a pullback to this step, and that's going to be about a 1.3% pullback. I don't know if we can really push any lower than that, given that these markets are, you've got this 20 EMA 4567s. That's going to be a bit more of a pullback indeed. You're looking at about 2.7% pullback to the 20. And given that we have been moving quite well to the upside, the 20 and the 50 EMA are really good swing long areas for these markets. So, for me, I can't really touch these markets at these elevated prices. They are just a bit too hot for my liking. Looking across to the Nasdaq, the Nasdaq is having a great time, as is its counterparts. There's been some really good trade opportunities over the last couple of weeks here. So let's see. Yeah, I mean, breadth is just huge on the Nasdaq. More highs, I reckon. We had this gap that is a bit of a suspect now, actually. For the intraday traders, I think we didn't fill this gap last Thursday. We came down, pipped the high, and just rallied into new all-time highs for all day Thursday, all day Friday. So now, because we didn't fill this gap, yeah, I definitely see a circumstance here where we, if we breach the S1 and the APAC lows here, I'll just put that on. If we do breach that, it's just a simple run down to the S3, close the gap, and then boom, we're getting on to the upside again. I think this Tesla event, this Tesla catalyst is certainly going to be a bit of a shit show, to be honest, for the tech stocks. The Dow, I don't know. I mean, I think The Dow's been a tricky one. I do like the 35,971s long, but that did come into play here last Friday around 7, 8 in the morning. Um, you know, yeah, I think we can push into new all time highs and probably hold on the Dow for today. R2, I think once we have a shakeout on the downside, then I think I would be interested in rebuying the 35,971s. However, if the shakeout is heavy, just get this browser. But if the shakeout is heavy, the first wipeout with stops to run will be longs at the 35.97s, and so pushing back down will be definitely on the cards there. Oil holding quite well on the highs. So we had OPEC last week. We had OPEC slapping the U.S. administration in the face, saying, "Listen, Joe, thanks for the postcard. We got the memo, but we're not putting on more than the 400,000." And that's why we're on up here on oil. I mean, interesting capitulation here last week. Huge breath on the market, about 6% move here. Pull back to the 78.26s. There is a gap here still open. I think there is a gap here still open. Yeah, there is actually, with the pink on my charts are gaps. So there's a gap still open on the downside. But OPEC at this point, OPEC were saying, well, we were coming into the meeting at this point. Then Saudi Arabia actually came out and said they've increased their production to a new all-time record, I think, at the 10 billion. But so it's kind of hard to, look for the longs while Saudi is saying that they're pumping at all-time highs. But yet OPEC then saying, well, we have 116% adherence to the cuts, and we're sticking to just only adding on 400,000 barrels a day in December. So that's why we're back up here, because OPEC are shrugging off the US request. The one major risk to this market is if the US administration release out of the SPR, which is their special kind of reserve of oil that they keep on the back burner for times of war or disaster. And they do now and then release from the SPR, so it's not a huge deal in the grander scheme of things. But I think there's now increased focus on the jousting between OPEC Plus and the US, and that any sign of a release from the SPR by the US administration is really going to be taken on the downside in oil. I think a lot of traders are going to be quite scared of the size of how much the U.S. administration would want to release from their fund. But I mean, I don't think they even. I don't think, number one, that Joe Biden is going to be allowed to release crude from the SPR. But if they do get there, I don't think he's going to be allowed release enough. So the magnitude of really to have an impact on this so-called situation for the US consumer with their high gas prices, really, I think the US is going to probably have to put on something in the order of the magnitude of like 200,000 barrels a day. I don't know if they're going to do that. Maybe even 4,000. I mean, they're requesting that OPEC put on an additional 600,000 to the four that they have. I just, putting net another million barrels on supply. So you have to imagine that the SPR release will be something of the magnitude of 600,000. But I just think that's going to actually create a sort of a negative echo loop for price impact on oil. Because what the SPR loses to the market, it will have to rebuild, for strategic reserves going forward. So I think it's probably not actually going to have the net effect that they want to impact oil prices. And of course, any other nation starts doing this, well, the US administration would definitely call it market manipulation, et cetera, et cetera. Anyway, I don't want to go on and on about OPEC and oil right now, but it is what it is. And I think the biggest shock to this market will be a release of the magnitude of probably 500,000 barrels plus from the SPR. All right, so moving on here. That's really it for me. I think the dollar should appreciate over this week and going into next week. I just want to be mindful of not trying to get in on that trade too early. Gold, we've really had the move on gold that we were expecting after the pullback here to the trend. We are now in this compression area, and you can see here on the weekly bars, once we got back into the compression area here, well, the target is back up above around 1828, 25s now, and I think we've gotten there. So you could see a little bit of a pullback in gold. I do like it on the short side at the moment, notwithstanding headline risk though. So yeah, I'd be careful about gold, and really I would be interested in buying the 50 EMA pullback. That's trading at 1801.7, almost in confluence with the S1 today. All right, that's it for me for today, and yeah, I'll be updating you during the week on these conditions, and do take care of yourself out there. Please do click to subscribe if you're watching this on YouTube tomorrow, and yeah, be good. Any questions or queries, feel free to message me on Discord or send me an email. All right, have a good one. Bye.